There's a guy named John Bollinger. Tom actually knows him. Tom Gentile actually knows him. But Bollinger Bands can be used in a lot of different ways. And what I want to focus on today, though, is stocks that have gone too far and may be ready to retrace, or maybe even stocks that have gone far and are ready to go further. And so think of Bollinger Bands as mean reversion. What does that mean? It means that stocks tend to stay at an average price. And if they move too much, like a rubber band stretching, the stock tends to get pulled back to its average. Maybe a 21-day moving average is a good one to use, or even a 20. So mean reversion is stocks, jumping the fence and then getting pulled back over the fence close to its mean. Mean reversion, rubber band, the stock moves hard, the rubber band stretches and then snaps it back to the mean, to the average. So that's mean reversion, and Bollinger Bands use that. Developed by John Bollinger in 1983. It detects when stocks are overbought, oversold, or poised for breakout. And the way you construct them is it's really two bands drawn at one standard deviation above and below a 20-day moving average. Here's what I'm talking about. So this is an older chart. These are Bollinger Bands, and what the upper band and the lower band are one standard deviation away from a 20-day moving average. And so what you can see in this relationship is this: 95% of the price action is contained within the bands. And the idea is that, one way to use them is if the stock hits the band, it has a good shot of bouncing back to the mean. So at these extremes, now here, it doesn't always work. Sometimes the stock keeps going. So those are breakouts, which we'll look at too. But in this case, the stock was dancing outside of the standard deviation line, and then ultimately did bounce back, but it took it a while after it first breached to finally bounce back. So that's a behavior. And so these are called breakouts, and we're going to try to detect those. We are going to detect those today. Here, the stock hits the upper band, bounces back to, like a rubber band. Rubber band snaps it back to the middle, hits the extremes, snap back to the middle. Again, it hit extremes a few times, and then finally bounce back to the middle. Same thing, hit extremes, bounces back to the middle. You can see the pattern quite clearly, and that's one way to use it. The other way you could use it is, and I've got the font squeeze, like a squeeze. When the Bollinger Bands get tight together, that means that there's compression and consolidation. And oftentimes, sometimes I maybe should say, this stock will gap right after the squeeze. So that's one way. It was the old way that it's one of the ways most people trade straddles, because it's a valid indicator for predicting breaks. Now with straddles, we like to use earnings. That's a much better catalyst than a technical Bollinger Band squeeze. So that's the basics of a Bollinger Band. And the other thing we can do with them is detect breakouts. So here, a huge breakout above this upper band, and then the stock ran up into earnings. Nice bullish run there. Here's another one. And I mentioned some of those before. Here's a breakout where the stock gapped down outside of the band and then kept going. So we can detect all of these different, here's another one, and that stock ended up dropping further from there. So we can look for breakouts. We can look for the stock to continue to move outside of the bands or back in the bands. And so we're going to use Tom's tools to go out and find these breaks. We're going to use the penny plus weekly stock list. And for what I'm looking for is I'm looking for breakouts, highs and lows. All right. Why? Well, a breakout high would be a stock that has breached the upper break even or the upper Bollinger Band line and looks poised for further upside. Same on the downside. You can use breakout low, and that will look for stocks that are tanking. So that's one application. If you want to look for squeezes you could use this option here. I'm going to hop into the scanner here in a minute. We'll take a look at some of this stuff. But like with any ranker, any technical indicator, I'm not one to just rest on the indicator itself. I like to confirm with other technicals, MACD, RSI, ADX. We've talked about all of these in the last recent series. Obviously, support, resistance, and volume, moving average, trend lines, and then news. Always, always, always news. We haven't taken a trade in this class without some supporting news, and I really think that's part and parcel of the reason we're operating at a 9% APL since we started snipers. Okay, let's get in and start playing around. I'm going to hop right in to the scanner in Tom's Tools. There's other scanners out there that can find these things for you. We love Tom's Tools, and it's a really cool way to find some directional trading opportunities. You go to stocks, stock rankers, Bollinger. And if you want to know more about, let me zoom in a little bit. If you want to know more about each of these wizard settings and how this thing works, click help. And you can, if you want the math, I used to be into this stuff. And then you can take a look at the rankings that are created. Breakout high, stocks are ranked by the highest. Yeah, see, that's the math. And this is the English. So breakout high using short Bollinger Band. This ranker is useful to determining stocks that are broken through the higher band. Sometimes it's a major breakthrough. Same for the downside. That's what I'm talking about. That's what we'll use the scanners for today. And then the lowest short Bollinger Band bandwidth. This ranker shows stocks that potentially making a move up or down. And then here's the squeeze. So this last one, if you're looking for stocks that are consolidating where the Bollinger Bands have compressed like a spring, stock looks poised for breakouts, you can use it in that fashion. Now, I'm not going to do that because our system, the one that we use here at MWTC, is earnings based, and I think much higher probability of profit with that straddle system than doing this technical system. So we're going to focus on the top two. Let's just take a look. I'm going to look for Bollinger Band breakout high. I'm going to take my list to penny plus weekly and hit search. We can take a look at some of these. All right. So here's one. I'm sure I got my date correct. I do. It's March. That's the last date, March the 3rd. You can take a look at some of these stocks. PCG, boom, a breakout. Love it. Maybe there's something for us there. And then we've got go-to. Baby. I'm going to write that one down. You know, here's earnings, good news. The stock's only at $5, but I don't care if I could come in and sell a 450 put or a 350 or a 4 put. I'm all over that one. So that one's interesting. First Solar is another that I've got on my list here. Check out First Solar. Oh, I lost my scan. Let me try. I have to run it again. It doesn't take long. Give me a sec. Let's go back into Bollinger. Breakout high, search. Back to my list. First Solar. Check out this bad boy. Earnings. Great earnings. Upgrades. First Solar. Found using the Bollinger Band breakout. Now, if I go to chart here, let's look at First Solar. If I go to chart here, and you want to see the Bollinger, here's the actual stock chart. Not a lot shown on the chart just yet, but if you want to see the Bollinger Bands on the chart, if you scroll down here where it says price band, so you scroll down the chart page to where you see price band, and you can select Bollinger Band. And then when I hit update, you can see the Bollinger Bands placed, and there's your breakout. So this stock was detected based on the fact that it didn't just touch and slightly go above the upper Bollinger Band, but it eclipsed it and looks poised for further upside. First Solar is a stock that I want to take a look at today. Let's take a look at a couple other ones here. Okta came up. Yeah, similar story. Really nice bullish earnings. There's a nice hammer there, doji with the long tail, and then a confirmation break above the upper doji. A really good opportunity for us to sell some puts underneath here. So I'm going to type in Okta. Man, there's just so many of them. There's just so many of them. Let's take a quick look at the bears. This is where I like to look the best. So I'm going to go short, Bollinger Band, breakout low, hit search. And check out some of this bad news here. Hormel. Oh, what? Yeah. Think there's some bad news for spam? I mean, good God, that's a huge tank in Hormel found with the Bollinger Band Ranker. If I come back to my stock chart up here and type in HRL and click update. Yeah, I like a nice little credit spread on here, maybe up at 43. If we can get any trades, that's the thing. There may not be any good credit spreads. Here's another one on Scalar. Boom. You know what I like about this one is when I see a stock that's under the 200, respecting the 50-day support, you've got the 200 above, you've got 140 above that, the stock's tanked. Now it's a hammer pattern, and we'll look at the news here in a minute, but not a hammer pattern, a doji pattern, and that could very well be sideways to up. So we'll take a look at the news on Scalar as well. You see how many opportunities there are always in trading, especially once you get to know some of these other indicators. I've looked at McKesson. Beautiful pattern here. Look, that 50-day crossing beneath the 200, that's your death cross, it's called. Stock's in trouble, heading down. You know, really good looking potential trade for a bearish credit spread. Okay, now let's look at Dell. I got to see what Dell's doing here. Dell, after earnings, it has respected the 200. I'm not too interested in going bearish on Dell. It did have earnings here. The stock stretched down, closed higher above the 200. We are right at the 200. I would expect Dell to go flat, maybe up, but stay range bound. I don't think Dell's going to keep dropping based on the technicals anyway. Okay, now from here, whether you're using bulls or bears, breakouts, highs or lows, you can always save the scan results into my stock list. Let's do that. I'm going to take these 7 stocks that have all broken down below the lower Bollinger Band. I'll replace them in my stock list, and then I can go searching. You know, you can go in here and you can say, all right, I just want to buy calls and puts. There's scanners for that. You like vertical spreads, you can do vertical spreads. Let's take a quick look here. Vertical spreads, these are debit spreads, right? So we are bearish on these stocks. And then I'm going to take my stock list here. And what I like about this scanner is that it also has a built-in bearish moving average crossover. The days that it uses are 11 and 15. You can do your own, maybe 10:30. 11:15 is more short term. I just take the basic settings, hit search, and in this case, there's none. Now, if I turn this scan off, this additional technical directional scan, and turn it off, then you'll see there's others. So McKinnison comes up, Dell, Ambarella, and a few others. So if you like debit spreads, that's a good place to start. Now, what I do primarily in this sniper's course is credit spreads. So I've gone to call credit spreads. I go to my stock list, and then I set my default parameters to short term, and then I hit search. And this is the only one that's come up on Scalar. So if I look at the moving averages with pick 3, this is the one I was telling you about. It has a nice drop here. The doji pattern suggests perhaps it'll stop dropping and maybe sideways to up. That's not ideal. So what I'll do next is I'll go into to Think or Swim, where I check my news. It's much faster. Let's go to a daily chart here. Oh, the markets are open. I didn't hear my bell. That was weird. Let's see what the markets are doing quickly. Let's pause for a sec. Yeah, not surprising. I do want to check UUP and gold. UUP is down, and that's why gold is up. Well, it's flat. Actually, it's pretty flat on both. Gold's down a bit. UUP is also down a bit. So we'll wait to see that relationship restore itself most likely. Back to scalar. Let's see what the news is on this bad boy. As I expected, that doji pattern on all that volume and the stock has, it's going sideways with strong resistance at the 50-day average, the red line here. So I might be interested in selling at 30, but before I do that, let's go back to the earnings date, which is this date here. And that date is March the 2nd. And then we can come in here and take a look at news on March the 2nd. Okay, now this is mixed news. They're trading lower despite better than expected Q2 results. That normally means they've lowered their future guidance. So I'd have to dig in here a bit and let's see. That's scalar guides for full year of 152 to 152. That doesn't tell me if that's higher or lower. So what I do here is I just sort of scan through the news. If anybody wants to help me, please feel free. If you see anything. Okay, I'm looking for the word lowers guidance without having to read all this detail. I don't care too much. I'm just looking for the future is going to be not as good as we hoped. And then I'll be good. That's what I want to see. Let us see here. Issues, guidance. Okay. Well, it says the company expects revenue of 396 million to 398 million. And analysts polled by Capital IQ expected 387.50. So that guidance is higher than was expected. And yet the stock has come down. So all that means is, to me, is that because the news isn't as dire as I'd like it to be, that the stock could very well recover. And it seems like it's trying to. It could very well come back up to 130. That's why I'd like to sell, but I'm not convinced the news is bad enough. Technically speaking, good trade. Restructuring. Let's see. I think it got some upgrades. Yeah, UBS scalar adjust the price target down from 180 to 170. That's a modest downgrade, lowering the price target, but they're still maintaining buy ratings. So it's not really super bad news, and we could very well see a gap from here. So I'm going to pass on scalar. And those are the only ones that came up in credit spreads. But let's take a look at some of these other ones that didn't make it through the scan, and that's okay. We could always build them from scratch. So I'm interested in CRM. No, not anymore. Not anymore.